We're recording. The amount of government spending is crazy, but if you look at consumer spending makes up 70% of GDP about, and you can see that, during COVID, during the lockdown, Americans stocked a lot of money away. A lot of money because you couldn't go out, you couldn't spend money, you couldn't vacation, you couldn't travel. And since the economy kind of opened back up, we've seen savings rates declining. But when you look at like a macro view, this is a cumulative excessive savings for Americans, and we got a lot of savings, $2.1 trillion. But you notice here in March 2024, we run out of money, Wendy. We have run out of money. There is the buy now, pay later, the payday loans. A lot of these lending that don't report to credit are at all-time highs, and they're seeing high defaults. They're seeing like 45% defaults in these payday loans. And that's your poorer consumer that are typically taking those payday or those buy now, pay later loans. And they ran out of credit cards, right? That we've seen consumer credit card debt go to all-time highs. Now we're seeing that we've run out of our extra savings that we socked away from COVID. So now we're dipping into our pre-COVID savings, and people are running out of money. So they're turning to another source with the payday loans. So that's just something to keep in mind when you're a landlord, when you're renting, trying to see who your market is. And then speaking of rent, we've seen rent change a little bit. We've got this little uptick here in single family. We're up to 5% increases in rents now. Post-pandemic, we got really crazy. We were up in the 13%, and multifamily got really crazy. They saw a drastic increase, and then they saw this sharp decline. And I found an article that showed that multifamily in 2023 had the most new completions because this is COVID era money. People were borrowing really cheap, and we saw 439,000 units completed in 2023, which was the highest since 1987. But the projections for 2024 is that there's going to get 671,000 multifamily units are going to hit the market. That's the highest level since 1974. So if you see multifamily rent continue to drop, maybe it becomes cheaper and maybe single family housing gets affected by that. So I thought it was a relevant thing to kind of show this group what the trends were. But you got to be watching the market and knowing that a lot more multifamily is going to come onto the market. In the bond market, this is mortgage-backed securities. So this is the UMBS 30-year 6% coupon. This is the active coupon that we make mortgage rates based off of. And we have seen a great improvement since April. April was kind of nasty. And on this chart, the higher, the lower the rates are. The higher this number, the lower the rates. A red bar means rates got worse. A green bar means rates got better. So since May 1st, we've had pretty much good news. And we crossed back over this red line right here. This is the 25-day moving average. And this blue line that comes across here, this is the 200 moving day average. So we had traded above it for a while rates were kind of improving. And then we just got some really bad bond auction news. This big red bar was a bad 10-year treasury auction. And it just showed that the investors were not liking what inflation was doing. So we saw rates get really bad for a while. And we dropped back under this 200-day moving average. But now that we've crossed back above it, you can see that we've stayed above. And it's amazing, these are called candlesticks. And this is the intraday trading. So on this day, the candlestick touched the bottom kind of resistance, which is now a level of support for us. It was resistance until we broke through. So this 200-day moving average is going to act like a level of support to keep rates from dropping back down below. And we just crossed over this 50-day moving average, which was a good sign. If we can stay above that for a little bit, now we've got some room to grow. The next major hurdle is the 100-day moving average. But if we can cross against that, now we've got some room to run and to see rates get better. I want to show you the 10-year treasury real quick. On this chart, down means mortgage rates are getting better. And again, we dropped under the 25-day moving average. Things had gotten ugly. Things were looking like they were going to get back to 5%, which is where they were last October when mortgage rates peaked. And thankfully, we had this level of resistance that rejected the bond from moving above. And now we've had this nice, soft falling in the last week or two. So it has actually been a nice kind of time in the mortgage market that, we were pre-qualifying people when rates were almost back as high as they were last October. And then once it came time to lock, we're actually saving some money. We're seeing people locking a quarter or 0.5% lower than where we were in the end of April. So activity's picking up. We're seeing more aggressive bidding on houses that are priced right. I've got a lot of clients that are going 5 or 10 grand above ask, and they're not getting the house right now. So it's kind of crazy that we're still seeing rates near the high sevens. I'm sorry, the low sevens at this point. And we're still seeing some aggressive real estate. People have been a little pent up and not able to buy or not wanting to buy, waiting for rates to come down. And this data with the year over year or the month over month appreciation just shows the marketplace is kind of tired of waiting. And inventories are going up, but don't let that be the headline that scares you, because they always go up at this time of the year. So there's a quick market update for you, Wendy.
Okay. I couldn't find my mute button. That's really good stuff. What are you seeing rate wise these days?
Let's go look at Investopedia, my favorite place to look at the average interest rates, because it surveys the top 200 lenders across the country, and it shows with no points. And so this is a kind of a true par rate, and we're seeing the average rates right now at 7.51. And they had gotten up to about 7.8 or 7.85 a couple of weeks ago. So they're coming back down. I've got a number of clients that we've been able to lock into the low sevens if you've got a decent amount of equity. We're starting to see some people pulling out equity with equity lines. That's becoming a lot bigger. Freddie Mac is actually looking at coming out with a second mortgage that we can sell on the mortgage side. So the marketplace has realized that there's a ton of equity in America, and people don't want to get rid of their low first mortgage rates. So they're starting to come out with new products, and we're starting to see second mortgages take off in volume. And I don't have any numbers around that, but I'm doing a lot more. I've got a couple home equity loans that we're doing right now, where people are trying to pay off some of that credit card debt. They've kind of, they take a step back and they realize, whoa, we've been spending way too much, and it's starting to get out of hand. So I do think that we could see rates start to lift, and maybe we've peaked. It's too early to tell. 1 week or 2 weeks is not a trend, so we want to see a couple more weeks to see that this trend is actually starting. But with the jobless claims kind of spiking, with consumer spending kind of showing soft and weakness, maybe we're getting to some news that's starting to be more digestible by the bond market, and maybe we start to see mortgage rates come down. The end of the month, we've got the Fed going to start buying mortgage-backed securities again, starting to buy 10-year treasuries again. They're right now letting the runoff happen at a big way. So when you make a payment on a mortgage, they don't reinvest any of that money. And they're going to start to reinvest some of that money, not specifically on the mortgage side, but on the 10-year treasury side especially. So we're going to get a little lift the end of this month and June 1st with some government reinvestment that hasn't been happening. And so, we could have seen a peak here. It'll be really curious to see how rates kind of evolve going into June.
Well, nobody wants to give up their 3% interest rate. I'm sure that's pushing second mortgages in a big way.
A big way. Yeah. Fannie and Freddie don't look at doing second mortgages unless they're like, hey, where's all the business? And there's still not a lot of refinancing happening because
Yeah.
people have threes and twos.
Yeah. Pretty and very, very, very interesting. Thank you for that. Anna, I want to get your take on well, one thing Derek said, do you think the election has anything to do with this? And then also talk about the impact of hedge fund home buying and people moving from high tax states. So what's your thought on that?
Yeah, I don't think the election has much to do with rates. It really doesn't. I mean, the only thing you'll start to see once we have a winner, you'll start to see different things happen, I think, in the 30-year fixed and the longer term yields, because and it's really more Congress than it is the president, honestly. But each party has a different plan for how to get us out of our national debt. And, regardless of, where you are politically, the Republican side generally says in order to create expansion, especially when there's real signs of a contraction and a hard landing ahead, a recession. Usually it doesn't happen until after an election year. I don't know why, but I think there's always hope during an election year that, things are going to turn around. But if a Republican is in office, presidential and Congress, you're more likely to see tax cuts to try to spark an expansion. If a Democrat's in office, you're more likely to see more spending and higher taxes, and that can impact people's perspective on where inflation might go long term. And if you have more debt and you don't stop spending, governments always bring more inflation, and the bond market knows that. They sniff it out. And so the Fed, regardless of what they do with rates, treasury yields could continue to rise. I don't think they will until after we have a recession. I still think we're in the recessionary camp. It's coming. It's just a matter of when, and all these signs are just getting more and more recessionary for the most part. When that happens, the Fed will have to cut interest rates drastically, and I'm expecting they're going to do that. In fact, I got a line of credit this week on a commercial property because I want it to be variable and I want to have my cash available. And once we have a recession, Wendy, banks are going to tighten. They're going to give you even a lower LTV than they will today. So this is kind of a good time going into maybe a recession, maybe rate hike, rate cuts start to come and inflation starts to soften, to get those lines of credit. And, when the rates really fall, then lock them in low, at that time. So don't think the recession has, the election has much to do. When it comes to the hedge funds buying, it's still a very small percentage of homes bought in the country. It makes big headlines that the reason our house prices are so high is because of the hedge fund buyers. In certain markets, there's some truth to that. The big hedge funds tend to focus on a couple of strong markets. I think they bought a lot in certain parts of Florida and Texas and Arizona. Especially. And so in some of those markets, you did have a lot of buyers, which forces up rents, but it also could depress values when they start selling. And a lot of them have started selling because they may put a whole bunch of inventory at one time. So, there's good and bad, but I think the biggest thing about real estate, and even with the chart, that Bryan showed with multifamily and single family, which was very good, is that there's big differences between markets. And so you've really got to know your market really well. One of the big mistakes that I see a lot of investors do, Wendy, is they say, oh, well, deals are really good in this city, so I'm going to shift and I'm going to go buy stuff in this city, without really knowing the market and knowing the history and the supply and the demand. So certain areas are very clearly oversupplied and rents are really coming down as all these new developers are having to offer free first month's rent, free second month's rent, low deposit to get their new inventory filled. That creates suppression in rents. But many other areas, I'm invested in multifamily, I think in 5 states right now. Pennsylvania, where I am, we're still raising rents 5 or 6% because we have extremely low supply. There's hardly any competition, and we can't get, our units stay about 99% full at all times over about a 10-year period. Where in Houston, where I have a couple properties, we're having to offer concessions to compete with all the new builds all around us, and rents are falling. So really know your area. That's more important than what the nation is doing. And then single family to multifamily, generally it's a different renter. It's someone that wants a multifamily is generally not renting a single family house. If they're renting a single family house right now, while interest rates are high, they're going to pay higher rents. And so, they want that house to live in, and they can't afford to buy the house. They're going to pay higher rents because there's just a lack of single family supply in so many markets, unless, like you said, there's a big hedge fund there.
Yeah. Awesome. Good stuff. Jeff Watson, I want to ask you real quick, if you've been keeping up with this. State of South Carolina just passed a law, basically where you can't wholesale. What's your thought on that? Have you kept up with that?
I saw that this morning for the first time. It's another of the many states that are absolutely sick and tired of the disgusting, illegal, incompetent, immoral practices engaged in by most wholesalers.
So true.
You have to be ethical. If a wholesaler would have actually sat down and read what the law is in their state regarding what they're allowed to do regarding a piece of real estate that they don't own. They don't own it. They may have a contract on it. They may not even have a contract on it. you've got to be careful. And I'm cheering for it because I want to see 90% of the wholesalers go out of business. They don't add value. They're bottom feeders. They don't know what they're doing. Sorry, that's my opinion.
No, I love it. And as a hard money lender, it doesn't bother me.
And the way I see this, and I've been okay. There were a couple of gurus in Memphis, Tennessee that called me in a panic 10 years ago because they were running into some issues with the state of Tennessee. And I've said, listen, here's the law in Tennessee. Here's how you can legally do it. The next thing I know, they take my idea, monetize it, stick it in a course, and I go off and make a bunch of money with it. So I got smart. Then National RIA and I worked together with the Ohio Division of Real Estate, which is a big influence in the entire state, entire nation. But we did a long series of videos on how to do it the right way. And people wouldn't pay attention. They wouldn't do it right because they'd rather follow that easy button, quick money now. Oh, I can get rich in a week methodology preached on YouTube, Instagram, and so on. And it makes me sick. But if you want to go after houses and do it in an ethical, moral manner, there's a way to do it. You just have, you cannot, it's never been legal to advertise for sale a property that you do not own, except in the state of Texas, where you have to specifically say, I only have a contractual interest. Every other state says you must advertise that you have a contract for sale and only market the contract. You have to market the piece of paper, not the house.
Good point.
Yep. So, I mean, I could rant and rave about this for a whole day, Wendy.
Well, you know what? We'll have you do that, Jeff.
Okay. By the way, National RIA just booked me yesterday to speak on this on their upcoming National RIA cruise. And when I looked at the timing of that cruise, and when I looked at everything else, I was like, oh, you want me on the same cruise ship that Generations of Wealth is going to sail out on the same next cruise? Oh, that breaks my heart. I have to do back-to-back cruises now.
You poor guy.
It just breaks my heart. And then, oh, I got like 6 days to get my act back together before Investor Addicts takes off. So, I mean, it's going to be a really challenging time for me.
I don't know how you live with yourself.
Lots of prayer.
That's awesome. Thank you for that information. That's good stuff. And we do need to get you to come and just spend, spend 30, 40 minutes on it. We'd love to hear more about that. Thank you so much.
I'd love to hear him talk along with that about what the subject of sub-2 or wholesaling sub-2 and what's so wrong with that, because I know someone personally, actually I know people that are connected to both sides of the coin of a major lawsuit where something was wholesaled sub-2. The lender's involved, somebody else is involved, there's fraud claims, and I think it all ties back to a lot of what people's being taught that's just purely wrong about sub-2.
Yeah, no doubt.
So I had the privilege of a couple of weeks ago teaching a 2-hour-long master class with Eddie Speed. And if you have not gone on Bigger Pockets and listened to the podcast that Eddie Speed did on this topic, you must go do it. I see Jenny nodding her head yes.
Tom Nardone was doing a thumbs up too. Yeah.
Because Eddie,
Jeff did a 1-day training here in Sarasota. Kudos to you, Jeff. That was awesome on sub-2 about 2 weeks ago.
Yeah, and I mean, I got to tell you, when you're in the front of the room and you're teaching and you see people like Tom Nardone in the audience, you're like, oh man, what did I do to get here?
Right.
That's a guy I've been looking up to for a decade plus. So anyhow, thank you, Tom. But check out that podcast from Eddie Speed. Check out the masterclass that he and I did on that. Folks, that's all 100% free content out there. It will explain it all. We'll walk you through exactly why wholesaling a sub-2 deal is not only immoral, illegal, but it's financially stupid. Financially stupid. So yeah,
Good stuff. Good stuff. And that's Bigger Pockets,
Bigger
Eddie
Pockets.
Speeds.
Eddie
Okay.
Speed. Yep.
Awesome. And we can get Eddie to come and speak with us too, folks. He's been on here several times. We'll get him to come back. He always loves to. So that's great stuff. Thank you. I'm always blown away by the intelligence in this room. Thank y'all for showing up. It's awesome. So I have to tell you guys this. I drank the Kool-Aid, y'all. I have been hearing about minerals, gas, and oil for years. And for years, I've been saying, it sounds crazy to me. I don't want to invest in something I don't know anything about. So what do we do when we don't know about something? What's the first step is to learn about it. And so I had some people that I really trust, get into this business, and I sat down and opened my ears and listened and learned. And I just got back, y'all know I was in the Bahamas last week at an event that was put on by Eckard Enterprises. And I was not only blown away by how wonderful the event was, but the knowledge that was shared in that room. It was really, really incredible. And so we have Derreck Long here. He is going to, everybody knows him from Quest. Well, he moved over to the dark side and is and is working with Troy Eckard at Eckard Enterprises. And my friend Nathan Rayburn, he's on here as well. I've known him for years with Freedom Founders, and he's now working with Troy Eckard. So there's people involved that I know, like, and trust. And I just had to learn a little more, and I'm glad that I did. So, Derreck,
Hey, Wendy.
the floor
for
is
having me.
finally yours. I'm so sorry for the wait.
What do you mean? That was great information. You know, it really was. As I said, if you're not listening to everything that's being put out and why you're putting this on, then you're crazy. Gosh, that really was good information.
Thank you.
I always tell people, guys, I am not an oil and gas expert. I really am a retirement expert, especially in self-directed IRAs, solo 401ks, or anything like that. That is, when I say that is what I know, like that is my level of expertise. It really, really is. And I had the privilege of working with Quest for about 6-7 years. And during that time, I got to see all of your guys' investments. Anyone that has a self-directed IRA, I saw the goods, I saw the bads, right? I worked with our special service team, which when things went really, really bad, like, we have to step in and look at it and figure out what happened. What happens when assets have to be valued down to zero. And it was actually kind of eye-opening. So what really happened is me and my wife were very privileged, and I joke, but I said we kind of cherry-picked investments. And honestly, that was the whole premise behind investing with Eckard Enterprises, right? Just like Wendy, I really didn't understand oil and gas. I understand it way better now over the last about 6 months to a year, but I'm still not an expert by no means. So I have a PowerPoint that I can go through if you guys like, but I thought maybe I'd just talk, and then if you guys want, I can maybe share some certain slides that maybe just kind of stick out to me. Is that okay, Wendy? Thumbs up? Okay. So I see a lot of you on here that I've worked with a long time. Rick Bressler, you and I get together. If you guys haven't talked to Rick, right, he runs Katy Capital out in Texas, right? I've worked with Susan Jensen. Hi, nice to see you again. And John Morey, I saw him on here just a little bit ago. So I've worked with a lot of you guys for many, many years. And I'll tell you, I've always heard that investing in oil and gas is risky, it's scary, and you can lose every dollar you invested and da-da-da-da-da. Have you guys all heard that before? All of that's true. I'm here to tell you right now, 100%, all of that is true. But it's because of the way people invest in oil and gas. The most common way people invest in it is something called working interest. Working interest, and I'm going to be upfront, is a 50-50. There's a 50% chance when you invest in working interest, you're going to lose every dollar you invested. Every dollar. There's a 50% chance you're going to make 10 times what you put in. Oh my God. So what happens is you hear the good side from the salespeople, from the sales pitch, and you don't hear the bad side, right? So all these people invest in this working interest, which is a fancy way of saying drilling for oil. What I did is I'm investing into a company. They said, hey, we're going to drill for oil. When we strike oil, right, or gas, we're going to sell all that and make a whole bunch of profit, and you get a big chunk of it because you invested in us, right? That's working interest. Now, Congress actually knows that it's this risky. Believe it or not, it has less to do with the operator and more just to do with the actual process of drilling for oil and gas, okay? So you have bad operators out there, of course. We have a lot of good operators, but it doesn't even negate the fact that it's still very risky to invest with, all right? And Troy Eckard being one of them. So notice we can invest in working interest, but it's very, very risky. It's the drilling for oil. That is not what I invested in with oil and gas. There's a very safe side to it, okay? And Congress knows that when you invest in working interest, it's so risky, they give you a huge, huge tax deduction. As of right now, it's 80 cents on the dollar. If we go back to the Trump administration, it was dollar for dollar. So normally what happens when people invest in drilling for oil, they invest the money that they owe the IRS. They invest, oh, I owe the IRS 25 grand this year in taxes. I'll put that in working interest because I get a big tax deduction, right? That's how people really, because, hey, look, that's what I owe, no matter what I'm losing the money as it is, right? Once again, that's not what I invested in. That's not what attracted me to companies like Eckard Enterprises. They own mineral rights. Mineral rights. This is drastically different than drilling for oil. So instead, what you do is you buy mineral rights per acre. There is an acre of land. Now, it's not on the surface. This is not surface rights. This is not, typically when you own mineral rights, you can't even walk on the land. It's not yours because you're thinking of the surface rights. You own 900 feet and below, right? So you own the ground under the ground when you buy mineral rights. You buy them per acre. Acres are fairly cheap. On the low side, I've seen $8,000 an acre. On the high side, about 50 grand an acre. So what's nice is the IRS considers this real estate. When you buy an acre of mineral rights, you can do a 1031 exchange. You can buy them with a self-directed IRA. You can buy them personally. But when you own mineral rights, what's nice is you don't have any liability. Why? Because it's not on the surface. So you don't have to hold things like insurance. You don't have to worry about lawsuits because there's nothing to sue you on. You're not the one drilling for oil. That goes to the oil guys that are drilling for oil, okay? You don't have to carry things like not only insurance, but there's no property taxes. So I love to know that, like, hey, look, I can buy an acre of land and I don't have any liability, any insurance, or any property taxes that I owe. So how do I know that the mineral rights I'm buying are going to actually make me money? You're saying, hey, great, I can buy 50 grand worth of mineral rights, but how do I know they're making money? What happens is Eckard Enterprises, and this is why they have grown so large, right? They buy the mineral rights first. You cannot raise capital for mineral rights in this industry. It is impossible because you're fighting against companies like Exxon and BP and Chevron. They don't need to raise capital to buy a 20, 30, $50 million project in mineral rights. So do you know how you buy it? You buy it in cash. So what happens is Troy Eckard, the guy that runs Eckard Enterprises, goes out and writes a check, and I'm not exaggerating. He has a project. Oh, it's $20 million. We close in 7 days. Here's a check for $20 million. Bloop, comes out of his own pocket. Before he purchases the mineral rights, right, there's already oil and gas companies on there that are already drilling for oil, already pumping, already producing. Now, it takes about 6 months before you see your first check, but after that, you get a monthly check moving forward for 25 to 50 years. That's impressive. That you can buy an asset, with no liability, no debt, and pays you every single month. Guess what happens if you don't buy it? He doesn't care. He already bought it. He wouldn't put forth his own capital at that level, all right, to go through these motions. And Wendy got to kind of witness it. Wendy, how much capital do you remember what he said that they've raised this year so far?
I don't remember what he said. The numbers all just got gobbled up in my head.
There's about $320 million has already been raised this year.
It's a lot of dough.
Now, to put that in perspective, all right, most syndicators that are raising capital for multifamily, even the bigger ones, raise on average between $15 to $20 million a year. We're not even in the same ballpark as real estate investors as these oil and gas guys are. They go, oh, 50 million, not a problem. Here's a check. And it's crazy to see this, all right? Now, on top of that, Eckard Enterprises, one of the reasons that myself and my family, we spent so much time, energy, and effort to buy these mineral rights, it's not just buying them from someone like Troy, okay? Right, and buying them from Eckard Enterprises. It was also the fact that we got to meet the other investors. And I think this is what Wendy got to see this last week in the Bahamas. There's people that have been investing with Eckard Enterprises since the 90s. And Troy puts them all in the same room. You talk about every one of my bad investments, every one of my good investments, please. Because the investors are the best salespeople.
And Derek, that's really what got my attention the most at being there is I was one of the newest investors. In fact, I didn't meet a whole lot of people that had been there less than 2 years. Most people had been investing in Eckard for 7, 8, 9 years. Most of them have. And I talked to 2 people that were there from the beginning that lost their butts on 2 wells that they were talking about, and they're still there with them.
That's the thing. I am, and I think that's what attracted myself and my dad so much to companies like Eckard, because once again, investing in oil and gas, all you hear is all those negative things, right? So when you can find a good person, a good company to work with, something where you have a hard asset, something you physically own, it's titled and deeded to you, just like a piece of real estate. You can do a 1031 exchange. You can buy them with a self-directed IRA. And usually the question I get then, well, what are the rates of return, right? Well, on average, if you go across the board and you just bought 1 acre in every package that Eckard has ever had, you'll get about a 15 to 16% rate of return. I tell people to expect in between 10 and 12%, right? I'd rather undersell and then over deliver. So what's nice is you'll always see this. And that's really it, guys. So I wanted to stress that if you really want to see a life-changing investment, if you want to see something that pays you every month and something that you can purchase using 1031s, IRAs, mineral rights, I firmly believe is the best asset. And I'm not saying that just because I work for Eckard. When I left Quest, it was funny. So what people don't know is I put a 1-year notice in, right? I was working at Quest. When I say 100 hours a week, I'm probably not exaggerating. I work Sunday to Sunday, 7 to 7, every single day for 6 years. The only time I took a vacation was for my wedding in those 6-year time frame. That was it. Never took another day off. But it's because I knew that Quest had the backing. There was a lot of potential there. And I knew if I could give my time, my energy during that window, I would drastically change me and my wife, like our life. We're ready to start a family. We're ready to kind of move. Man, if you ever have a chance to come to my place, I have more land. I have over 100 trees. I love our house that we have. You know, this is my job now, is to work with you. I work from home, right? You're lucky I'm not wearing pajamas. I'm wearing jeans for once. Okay, but it was unique because of you guys. I really cherry picked a lot of my investments. And me and my wife started picking investments based off what would replace a bill. Or our electric bill's $300 a month. All right, let's find an investment, pays us $300 a month. And what ended up happening is we kept coming back to the minerals. Why? Because it pays us for 25 years, 50 years. Wow. Before we knew it, our bills are covered. And that was the biggest life changer for me. So that was really it, guys. I know I want to try to keep this as an open forum. I have a bunch of slides and stuff I can go through, but we actually have Nathan Rayborn on here. Nathan, do you want to put your phone number and email and stuff in there in the chat for people? So Nathan,
Wendy already did that.
Yeah, but it won't hurt for you to redo that.
I will.
So I think Nathan, is your email Nathan at Eckard Enterprises, or is it Nathan?
In Rayburn at
Oh, it's N Rayborn.
NR.
Yeah, put your email in there. So
yeah, put it in there right, because I don't know if I messed it up. But I want to make sure too that you talk a little bit about the 1031 strategy
absolutely.
that you've talked about, because I've told people that you can 1031, and they're going, well, wait a minute, is that like kind?
It is. So when we use the term 1031, that's the part of the revenue code that this all falls under, right? And it's IRS revenue code 1031, labeled as a like kind exchange. So when we're selling an asset, right, for profit, right, that profit should be taxable unless we can exchange it for an asset of equal or greater value. Okay. So if I sell a house for 100 grand and I'm going to owe taxes on 100 grand, what are us as investors typically going to do with that $100,000? We're going to reinvest it. This is very, very common. So what we see a lot of people do is they sell those rentals, they sell those apartment complexes, they sell those real estate assets, and pretty much they started picking up mineral rights with it. And when you do this movement, I like to think of it, and the way I describe it just for visual purposes, is the money stays at the title company, and I just have another closing coming, right? When I buy a house or I sell a house, the money goes to the title company, and instead of releasing it to me, they're just buying another asset with it. Because I never took constructive receipt, I don't owe any taxation. Now, usually the first question I get in this aspect is, well, Derek, can I pull out some of the money? Yeah, absolutely you can, right? So if I say, hey, look, I want to pull out 20 grand to go spend to buy a car, go on vacation, right, from the sale, but I want to invest the other 80, you can absolutely do this. Where this does get a little tricky is if you have a loan on the property, the loan will have to be repaid, which can come out of those funds. But in certain cases, it can create something called phantom gains. And the phantom gains is kind of you made income off the loan, but you didn't really make any income, and the IRS can try to tax you on it. So before we ever do a 1031 exchange, I try my best to pair you with someone that's an expert in it, right? That's local to your area of where you're selling the property. So, but it's very common. 1031 exchanges is absolutely incredible. I personally love to see people do this with a self-directed IRA. So when we use a self-directed IRA with this stuff, there is zero UBIT or UDFI. No chance of a prohibited transaction. These are great assets that leave awesome leaving legacies. If you're someone that's worried about RMDs, mineral rights are easy to have valued and distributed on an individual acre basis if you don't have any cash in the IRA to satisfy RMDs. Lastly, if we're using a self-directed IRA for mineral rights, there are certain packages and like minerals that you purchase that can be devalued for Roth conversion purposes. It's incredible. So we see people buy $100,000 worth of minerals, but they do a Roth conversion at 70 cents on the dollar or less. So they are just in general great assets from that standpoint. Best explanation of a 1031 I've heard. Yeah, thank you, Randy.
And
what is the return? The returns I like to think of it like owning a rental property. Rental property A and rental property B are giving you different rates of return. So on the low end, I want you to consider 10%. On the high end, consider it 15%. And anywhere in between.
And then what happens when the wells run dry and you want to get rid of it? I mean, that's a question you got to get all the time, right?
Oh, all the time, all the time. So first off, when we look at some of the mineral rights, they have still been running for, you'll see they have what they call vintage wells that are 25 to 50 years old already. And the minerals that are being purchased are in what they call the Permian Basin or the Anadarko Basin, which in the States is the largest oil and gas basins where there is oil and gas here in the US. So the big oil companies expect that there's enough oil there for the next 125 to 150 years at the current rate we are using oil and gas. So knowing that, even if you cut it in half, you still have 75 years worth of oil and gas there. But let's go and pretend, hey, look, they ran dry tomorrow. That's just all we're talking about is the oil and gas leases. You guys own still the minerals underneath there. This could include things like water rights. This could include things from other precious metals that are in there. They're yours all the way down to the core. When you're buying these mineral rights, we're buying them based off of a current lease agreement with a large multi-billion-dollar oil company. The billion-dollar oil company signed a lease agreement with you saying, hey, we will pay you for your minerals. That's it. Is there other minerals down there? Absolutely, there is. So that's kind of always been my thought process. If they do run out, great. On average, you usually get 100% of your funds back, I say, by year 5, give or take, you know, and you never lose your principal. So.
And what if I want to get out? How am I going to do that?
So what's nice is mineral rights actually have their own MLS program. Just like real estate. You list them. You list them up for sale. And people buy them. On average, the day that a individual acre or is like listed on the MLS program, it takes 6 weeks or less and they're sold. So, and how we talked about that a lot in the Bahamas. It was like, look,
yeah, we did.
You want out? Sell them. Just get rid of them.
That's right. So what about the government shutting down oil production and the pipeline and no more drilling? What about all that?
So anytime that happens, right? What happens to us as a society? Oil prices skyrocket at the gas pump, right? But it's not just that. What people don't realize is oil and gas. When I used to think of this, I always related oil and gas to what goes in my car. Every piece of plastic, every piece of clothing, every fragment of paint is created by oil. All of it. Pretend tomorrow, because I know Wendy asked me earlier about hydrofusion and stuff like that, as far as, or if there's a way to replace the energy, right, that we use for cars, sure. But it doesn't replace how much plastic we use as a society. And that's where oil is also being utilized. It's not just what's going in our cars. Next is when we see these gas prices skyrocket, many times, yep, hey, we're going to halt drilling. That's okay. If you're a mineral owner, you go from selling a barrel of oil for $60, $70 a barrel to $100 to $150 a barrel of oil. You're making more money. Think about it. So honestly, it's and if you ever hear Troy Eckard himself say, he says, my grandpa would roll in his grave if he knew that we didn't care if Biden got into office because oil prices skyrocket. It's good for the oil companies. They're selling it and making more money. So
it's really amazing. It's such an interesting investment to me. And you know, I love real estate. I live, breathe, everything is real estate to me, and that will never change.
Absolutely.
But we need to be diverse in what we do. And I think, you know, whether it's this or anything else, you should investigate different ways that you can be diverse in your investing. Be smart about it.
Jenny?
Go ahead.
I would say Jenny asked a great question. She actually said, would this be a good investment strategy if I'm over 75, right? Okay. Is it considered more risky? So once again, Jenny, drilling for oil, absolutely very risky, very profitable though, okay? That's where oil and gas guys, that's why you see there's so much money. I'm not exaggerating when I say you can make 10 times what you put in, and usually within the first year to year and a half. Remember, 50% chance you're going to lose every dollar you invested. All right. Very risky, very high rates of return. Mineral rights, on the other hand, not risky. It's really not. And the reason why is A, it is a hard asset. B, before you purchase them, they're already producing. All right. You're already have an oil company on there. They're already signing an agreement before you even buy and saying, we're going to be drilling for oil in this spot for 25 years. All right. Next is they are liquidatable in the aspect you just throw it on the MLS at any time you want to sell it. They're always increasing in value. So we've never seen in the 150 years that people have been buying and selling mineral rights going down in value, right? They've only ever gone up in value. Lastly is, I would think one of the biggest things on here that we haven't even talked about is the legacy leaving aspect. Many of you out there would do things from talk to Mary Hart and Emily Bowles and stuff like that from a estate planning aspect to leave funds for the next generation, that legacy planning aspect. You know, hey, I want to make sure my family's taken care of when I'm gone. That's a mineral right. Remember, you're buying an asset that's going to pay you for the next 25 to 50 years every single month. Imagine you could put in $1 million into one of these minerals. What ends up happening, if you could get the 1% a month, that's 10 grand a month passively for 25 years.
Mm.
That's life-changing. It really is. And not just for you, but for that next generation. And this is also where you see a lot of real wealth get built from that standpoint. So,
You know, it's
I hope that helps, Jenny.
that's good, really good stuff. And I think it's interesting to know too. If y'all haven't read the book, The Absent Superpower, you need to get that book. There's another one called The Accidental Superpower, and it talks what's going on really throughout the world. Really, really good stuff. Is this something that you have to be an accredited investor to invest in?
Yes and no. So because you buy them per acre, you do not need to be accredited. However, Eckard Enterprises request that you be accredited. This is because it's actually a very private investment group. When we have minerals that are for sale, right, they are per acre and they run out. There's a reason we can raise $300 and $400 million in a 6-month time frame or 5-month time frame, is because it is a limited supplies that we can offer to our investors. So we don't just let anyone come in and purchase them, you know, just willy-nilly. We really, really don't. Many times you actually have to have it in, you have to know somebody, right? You have to, it's not just anyone out there is allowed to invest in it from Eckard Enterprises point of view. We want to make sure that if you're going to come to one of our conferences, that you're going to be working with us, that you are not an investor, you are a partner. If you say, hey, well, I want to tiptoe and I'll go and try $25,000 worth, this is not the investment for you. I'd rather see you take 100 grand and put 25,000 into 4 different mineral, and they call them mineral packages because the state puts them together and says, hey, these 500 acres, and they call it a pooling aspect, which we can get to later. So it doesn't matter which acre you own. They all get paid the same. But so these little mineral packages that are put together, I'd rather see you buy 4 different mineral packages versus 1 on 100 grand and diversify your portfolio, et cetera. But if you're like, hey, I just kind of want to tiptoe, I want to see what's going on, don't do it. Eckard Enterprises doesn't want you as an investor from that standpoint. We want partners. We want people that are with us long-term. And that's why we host conferences, to bring everyone together, right? To let you talk to those. And like Wendy was saying, people that have been investing with them for years, for 10 years, 20 years, etc. So I hope that helps. So you don't need to be accredited, but we request that you be accredited.
Gotcha. Does anybody else have any questions? I know I've been asking things that I know people ask me if I'm talking about it, because I don't know the answers to everything for sure. Anybody else have any questions?
The biggest thing, guys, is Nathan's on here. All right. I can't stress enough that I am not an oil and gas expert. I really am a retirement expert. I've been privileged to speak at Congress 8 different times. Outside of Eckard Enterprises, I also work on a government relations team, and I work for a law firm labeled Protect Wealth Academy, teaching CPAs and attorneys retirement tax code. I'm a freaking dork. Okay. That is probably an understatement, but I really, really am. Nathan here, though, he's worked for Exxon for 13 years. He's the guy that you want to talk to that, like, hey, if you want to get into the nitty gritty and make sure that this is a good asset investment class for you, reach out to him, right? And I, not 100%, but I think we still have about 120 acres left available of what they have is, and they call it the beard package. It might be a little less than that. Correct me if I'm wrong, Nathan. So minimum investment amount, what are the tax credits say? There is, so it's not that there's a minimum, Lyle. Good question. It's if you're looking to, well, I just want to try to invest 25 grand because that's the minimum, or 15 grand because that's the minimum. Remember, you're buying them per acre. Acres range as low as 8 grand. I've seen all the way up to 50 grand. But if you're like, I just want to try it out, don't do it. I'm telling you right now, we don't. Troy Eckard himself won't even let you be an investor in it. Right? It's no, hey, if this is something you're really considering, we want you to make a commitment over the next 5 years that you will invest X amount of times. Right? And that is the honest answer. So it's not that there's a minimum, because there's really not. It's how often are you really looking to add minerals to your portfolio? So
well, I think too, it's really important for people to understand why he wants you to make a commitment to be a partner and invest in more than one package, because he's got to write that big fat check to buy the next ones. So he needs to recapitalize his personal money so that he can continue to grow this business and give you opportunity to invest in more. That's, just like we do in a fund. We take our notes and we sell them off. Although we still remain in control of them, we sell them off so that we can recapitalize what we have and make more loans to be able to sell more off. It kind of feeds itself, if that makes sense.
that's a great explanation, Wendy. It's too many times I see people, they like, yeah, Wendy's right. When she does a loan, when Carolina Capital does a loan, Wendy has to put up her money first, and then she sells the note, right? That's the same thing that's going on with Troy. Is at Eckard Enterprises, they have to put up the money first, and they hope to recapture it from you guys as the partners. So
I know what else I wanted to bring up too, and I'd lost my train of thought on that. Here's the other thing that really impressed me about what I learned at this event is the technology in drilling for oil now and minerals. It's like in the past 5 years, the change is phenomenal.
yeah,
And I think one of the things that was mentioned was when you're drilling, AI that's in these drills. It tells you the pressure, everything about what's going on in that drill right then, like it's live happening right now. So where it's going and where it should go, and you can fix it. And 5 years ago, if you were 75% hitting the target that you were going after, that was really good. Now, if you're at 75%, you'll lose your job because they're shooting for 95%. So it's amazing the difference in what technology has done, right?
yeah. And it really, really is. So it's I see a question. What percentage of management fees do Eckard charge? So all the way up till recently, we actually didn't charge a management fee. All right. But we do, because we're growing so large, we have to charge, and I can't remember if it's $1.80 or if it's $2 per acre that you own as a management fee. We don't make money on that. Right. We literally make money because we own a percentage of the minerals with you. We run 100% of the company based off the passive income that is consistently generated from the oil and gas investments. If we are buying 500 acres, we're keeping 100 acres for ourselves as a company, and we're selling the other 400 acres to you. If there have been times we've had to mark up those acres that we sell, but we're very open about it, and you see it right in your contract. It's like, hey, look, we bought these acres for $10,000 an acre. We had to mark it up to you by $500 because it had to cover the geologist fee or the attorney fee or whatever it is. It's something it's so minuscule it doesn't even matter. So
All right, this is really good stuff. One of the things that I would recommend to you all is reach out to Nathan. He can get you set up so that you're getting some videos directly from Troy on explanations of how these work, where certain things are located. He'll tell you about the Permian area, why that's important to be able to drill there, what, how deep these wells really are, the possibility of what you're able to get off of certain locations, how he can even mix a vintage well with a new purchase location into one package. It's really so interesting to listen to him and the other people that are on his team, that are geologists, these scientists, these people that really know what's going on. The explanations are amazing and very, very informative. So
Also, check out the Southern Charm event John Morey is going to be hosting coming up. It's his first.
yeah, that's right.
Or no, it's his second
Right.
one. Yeah, sorry.
And that's in September. What's the date? September
19th or 21st. Derek connected me with Troy, and so Troy's going to be speaking at the event. So I appreciate you, Derek.
Yeah, it'll that right there is worth the trip, and that's going to be a great conference, I can tell you. So this has been awesome. So grateful. Folks, if you need Nathan's information, it's right here on the chat. So please make sure you copy and paste that. We are so grateful that you guys were on here today. Thank you so much. It's great information. We
Thanks for having
are going to go ahead and close in prayer. And Wendell, can you unmute by any chance?
Can you hear me?
I can. Can you close us in prayer, my friend?
Sure.
With enthusiasm, he says.
Who said that?
You just sure. Go ahead.
All right. Dear Lord, thank you for the blessings you give us and the things you bring to our attention that help us to be able to further your kingdom in any way we can. Let us use it for that purpose. And always remember to endure, as Tom said, the race, never give up, but always work with all of our being to grow and help others on their journey, encourage them. And we just pray these things all in your name, Jesus Christ, our Lord and Savior. Amen.
Amen. Thank you so much for that. I appreciate that. Y'all, your brain power is amazing. Thank you for sharing, and I can't wait to see you next week. Thanks again for coming, y'all.